Here's a stat that's either going to make you bullish, nervous, or both. 95% of all Bitcoin has already been mined. The hard cap? 21 million coins. That's it. No more. Digital scarcity locked in forever. Sounds legendary, right? But here's the twist. While Bitcoin is the digital equivalent of stuffing gold bars into a vault, smart money isn't just hoarding it. They're quietly moving into something else. Ethereum. Why? Because while Bitcoin is the ultimate vault, Ethereum is the entire city built on top of that vault. It's the place where money moves, contracts run, and trillion-dollar industries are already being rebuilt. Remember AOL in the 90s? Dial-up screeching through the phone line, getting those free CDs in the mail? Everyone thought that was the internet. Wrong. The real backbone was something invisible. TCP/IP. Boring name, world-changing infrastructure. Ethereum is today's TCP/IP. Disclaimer: this is not financial advice. It's for education and entertainment only. I'm not telling you what to buy, I'm telling you why the smartest players in finance are making moves and how you can understand the playbook. Let's give Bitcoin its flowers. It earned the crown. Launched in 2009, right after the financial crisis, it was the middle finger to Wall Street. No central bank, no printing press, no bailouts. Just 21 million coins, coded into existence, immune to human tampering. And for over a decade, it's been the MVP of assets. Over any 10-year stretch, Bitcoin has beaten stocks, bonds, gold, even real estate. It's the heavyweight champ of returns. But here's the problem. While Bitcoin won the first round, it's looking more like a trophy than a tool. It's the digital version of gold, amazing to hold, but not exactly useful. Think of gold during the California gold rush. Everyone rushed west to dig, dreaming of riches. But who actually got rich? Not most of the miners. Nope. It was the guys selling the picks, the shovels, and the jeans. Levi Strauss literally built an empire on miners who went broke. Gold was valuable, but the infrastructure around it made the real money. That's Bitcoin today. It's the treasure in the vault. You can brag about owning some, but it doesn't do much. And the proof? 65% of Bitcoin hasn't moved in over a year. That's a great stat for scarcity. But for innovation? That's like parking your Ferrari in a garage and never driving it. Cool flex, zero utility. Here's another way to see it. Bitcoin is a wheel. Revolutionary invention, changed everything. But once you have the wheel, you need roads, cars, highways, cities. That's where Ethereum comes in. Bitcoin invented the wheel. Ethereum built the freeway system. And here's the heavy crown problem. Bitcoin can't adapt. Its strength, immutability, is also its weakness. Try suggesting a major upgrade to Bitcoin and watch the community riot. Ethereum, it's been through forks, upgrades, shifts from proof of work to proof of stake. It evolves. That doesn't make Bitcoin worthless, it makes it pure. Institutions love that. A digital vault that nobody can mess with. It's the Fort Knox of the internet. But you don't build skyscrapers inside Fort Knox. So yes, Bitcoin is the crown jewel. But a crown is heavy. It doesn't innovate, it just sits there and shines. And that's where the story changes. Because smart money isn't just hunting for treasure to lock away. They want the rails, the shovels, the skyscrapers, and Ethereum is exactly that. If Bitcoin is a vault, Ethereum is the entire digital city built on top of it. It doesn't just store money, it moves it, programs it, and builds new industries around it. Think of it this way. Bitcoin is like the invention of the light bulb. Edison changed the world by letting us light up the dark. Amazing, but still, just one use case. Then Nikola Tesla came along with alternating current, and suddenly electricity powered everything. Refrigerators, radios, factories, entire cities. That's Ethereum. Ethereum didn't just ask, what if we had digital money? It asked, what if money itself was programmable? And the answer was mind-blowing. Let's start with DeFi, decentralized finance. Take Uniswap, a decentralized exchange with no CEO, no HQ, no Wall Street trading floor. It's just code running on Ethereum, yet it regularly processes more daily volume than Coinbase, a publicly traded US company. That's like a farmer's market outselling Walmart, except the farmer's market runs itself 24/7. Then there are stablecoins. Over $250 billion worth circulate on Ethereum's rails, and thanks to new US legislation, that number could explode to $4 trillion. For context, Visa, yes, the credit card giant, processes around $12 trillion annually. Ethereum is catching up fast, and it's doing it without needing a single branch office. And here's where it gets spicy. Every stablecoin transaction, every mint, every burn, every swap, creates demand for ETH. That's not speculation, that's utility. It's like owning the toll booths on the busiest highways in the digital world. But let's zoom out. Stablecoins are just the beginning. Ethereum is powering NFTs, DAOs, tokenized real estate, on-chain treasuries, you name it. Whether you care about cartoon monkeys or not, the underlying tech already proved one thing. You can represent ownership digitally, transfer it globally, and do it instantly. If you've ever sent ETH and thought, why does this cost me $20? Think of it like this. Ethereum gas fees are basically toll booths. At first, it felt like the worst traffic jam ever. Grades like rollups, sharding, and layer 2s are basically adding extra lanes to the highway. You don't abandon highways because of traffic. You expand them. That's what Ethereum is doing. Here's a stat that doesn't get enough attention. As of last year, over 60% of DeFi total value locked, TVL, lives on Ethereum. Competitors pop up all the time. Solana, Avalanche, Cardano, but Ethereum has the liquidity, the developers, and the first mover advantage. It's like the App Store wars. Sure, Android exists, but iOS is where the money is. Ethereum is Apple's ecosystem, sucking in the best developers and the most dollars. Another analogy, Ethereum is AWS, Amazon Web Services. Nobody cares about the servers that run Netflix, Uber, and your favorite apps. But those servers run the modern world. Ethereum is quietly becoming the AWS of money. Not flashy, not hyped every day, but absolutely critical. So what's the takeaway? Bitcoin is an incredible store of value. It's gold. But Ethereum? It's the rails, the tolls, the electricity grid, the internet backbone. Every time something moves, every time something gets built, every time a new industry tokenizes, Ethereum gets its cut. And when you start throwing around trillion-dollar numbers like 4 trillion in stablecoins, you know exactly who shows up next. Wall Street. And trust me, they're not here to experiment. They're here to rebuild finance itself. Back in 1971, Nixon ended the gold standard. The dollar was no longer backed by gold, and Wall Street didn't panic. They partied. Why? Because when money floats, you can build new markets. Futures, options, swaps. That $600 trillion derivatives playground was born overnight. Fast forward, Bitcoin is digital gold, but Ethereum, that's the playground. JP Morgan is already moving tokenized US treasuries on Ethereum. BlackRock's CEO calls tokenization the next generation for markets. Citi projects it could be a $5 trillion market by 2030. These aren't Reddit traders, they're the biggest money managers on Earth. Now, Bitcoin maxes say, see, Ethereum is just selling out to banks. But here's the thing, banks don't care about ideology. They care about infrastructure. And Ethereum cuts costs, removes middlemen, and runs 24/7. That's why Wall Street is choosing it. So no, Bitcoin isn't dead. But in terms of building the next financial system, Ethereum is the rails, and finance isn't the only trillion-dollar industry gearing up for Ethereum. Artificial intelligence is knocking at the door. AI is like the internet in 1995. Clunky, weird, sometimes creepy, but everyone knows it'll reshape everything. The challenge? Trust. How do you verify what an AI does? How do you know the money it spends, the contracts it signs, or the data it uses is real? That's where Ethereum shines. Imagine AI bots that rent cloud storage, pay workers, or trade on markets, all verified by Ethereum smart contracts. No fraud, no double spending, no middlemen. AI scams are already costing Americans billions per year. Deepfake CEOs tricking employees into wiring money. Fake voices calling family members. A blockchain log could stop that instantly. Ethereum plus AI is like electricity powering machines. First came lights, then came factories that never slept. This combo creates an economy that runs 24/7, human-free, trust-verified. Which explains why smart money isn't just holding. They're positioning for the infrastructure that runs both money and machines. Let's be clear, smart money isn't dumping Bitcoin because it's worthless. Bitcoin is still the vault, but Ethereum is the skyscraper city rising above it. Example, Amazon didn't just sell books, it became the infrastructure for everything online. Today, AWS runs Netflix, Uber, and half the apps on your phone. Ethereum is AWS, but for money. Institutions aren't sentimental. They don't care about Twitter debates, they care about ROI, growth, and infrastructure. Bitcoin is static. Ethereum is dynamic. Chart this out. Since Ethereum ETFs launched, inflows have been accelerating. Hedge funds and pension funds don't see a meme coin. They see rails for finance. If that Amazon analogy clicked, say hello in the comments. I want to see who's holding the vault, the rails, or both. But the long-term game is even bigger, because Ethereum isn't just growing, it's rewiring money itself. Bitcoin maxes out at 21 million coins. That scarcity is unmatched. But Ethereum? It's got a trick, EIP 1559. A portion of every transaction fee gets burned. That means the more Ethereum is used, the scarcer it becomes. Some call it ultrasound money. Here's the analogy. Gold sits in vaults. Oil powered the Industrial Revolution. Rockefeller didn't just hold oil barrels, he built Standard Oil and became the world's richest man. Ethereum is that oil. It fuels the digital revolution. Tokenized assets are the key. City projects $5 trillion by 2030. That's just 5 years away. If even half of that runs on Ethereum, ETH isn't just an asset, it's a toll booth on the new global economy. Bitcoiners argue Ethereum isn't secure, that it changes rules too often, but Ethereum fans counter with upgrades equals innovation. Who wins? History favors the system people actually use. Which brings us to the question smart money already answered. Is this the end of Bitcoin or a new division of labor? Here's the truth. Bitcoin is digital gold. Scarce, incorruptible, untouchable. It will never lose that role. But smart money isn't stopping at storage. They want rails. They want skyscrapers. They want cities. This isn't Bitcoin or Ethereum. It's Bitcoin and Ethereum, but with different jobs. Bitcoin is the vault. Ethereum is the city above the vault. History repeats. Gold built trust. Oil fueled industry. The internet built communication. Now Ethereum is building finance. Remember AOL versus TCP/IP. AOL is a trivia answer today. TCP/IP still runs every app, every website, every call you make. Bitcoin has the brand. Ethereum has the backbone. The smart money knows infrastructure wins every single time. Subscribe now. Until then, zoom out, think long term, and remember, wealth isn't just about what you hold, it's about what you build on.